Hey guys, Paul Seaton here from Books to CFO Advisory Services. It is Tuesday, March 31st, 2020, and in this video I'm going to be covering what I believe the biggest mistake that small business owners are going to inevitably make on this application. Why is this a huge mistake and why is it a problem? Well, the mistake that I'm going to describe is going to cost you as the business owner a lot of free money that you will not need to pay back. All right, so what am I talking about here? Let's say you own an LLC, right? You run a business, you don't have any partners, you have 4 employees that are on payroll, right? You're paying them W-2 wages if they're salaried or hourly. And you leave yourself off the payroll. You just take money out of the business whenever you want. You might pay yourself every week or every other week, maybe every month. Okay. That money that you are taking out of the business is considered an owner's draw. Okay? It's not payroll. It's not a salary. For all intents and purposes of this video, it's an owner's draw. At tax time, when your CPA goes to do your taxes for your LLC, owner's draws are added back to your profit and loss to determine what the business made as a net profit for the year. So, let's say that your business does $500,000 in revenue and you pay your employees $100,000 each, right? So there's $400,000 of expenses. That would leave $100,000 left over. However, throughout the year, you have been taking draws against that $100,000 profit. Let's say that you only take $80,000 in draws. Well, you might be seeing on your income statement, oh, well, I have $20,000 left over. That's what my business made. That's not correct. For tax purposes, the draws that you are taking, as I said, are added back to net income. Why is this an issue? What I foresee happening is a lot of small business owners are going to take the $80,000 that they paid themselves and use that in their payroll calculation to determine how much they can borrow. That's a problem because the smaller the dollar amount that you use in that calculation, the less you can borrow and the less free money you are going to get from the government. So, what is my point here? My point is this. You need to look at the Schedule C that is on your 2019 tax return, if it is available, to determine what your compensation is for the business as a business owner. I don't care if you only took $80,000 out of the business for the year to pay yourself. You know, you took $80,000 out of your business checking account and put it into your personal checking account to save yourself, to pay yourself, and left $20,000 in the bank. For this calculation, you need to use what is showing up on Schedule C as your income. So whatever flowed through from the business, say it's $100,000, that's what needs to be included for owner's pay. I know some of you might have questions about this. I don't want you to mess it up because, like I said, there is free money on the line here, and the bigger the payroll amount that you can use in the calculation, that's going to be determined. That's going to determine how much you can borrow. The bigger it is, the better it's going to be for you as a business and as a business owner. So leave your questions in the comments below and I will get back to you guys as soon as I can. I'm going to keep the content coming because I think there's a lot to cover here. But in the meantime, just reach out. I'm happy to help and looking forward to chatting with you guys.